A historic moment in gold is happening today. We are breaking the long-term downtrend and jumping above the 200-day moving average. Bear market is officially over. But if you feel, man, I missed the boat in gold and in silver, I got good news for you. In today's show, I'm going to show you two metals that nobody's talking about yet that are next in line to rip to the upside. I'm going to give you a bonus metal that is probably the hottest setup right now in the commodity markets that could just rip to the upside. This is your show if you have been looking at gold and silver and shaking your head and saying, I can't believe I missed it. You haven't missed anything yet. There's going to be a ton of money to be made. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Well, everything starts with gold. Welcome to Hot Trades of the Day. My name is Daniel Helmin. As you can see, wow, gold cannot be stopped. This is exactly the reason why I told you the beginning of the week and last week, do not short gold. I really, really hope you took this advice because that would prevented you from severe losses, which is, by the way, one of the reasons why the gold price is jumping so much. I told you, I think it was on Monday or even last week, we're going to have a lot of short positions sitting right at that 200-day moving average, that downtrend, that uptrend, the green line you see here, and I'm going to zoom out for you so you can see it even clearer, and the horizontal zone. And if we break through there, you see how far we have to go back for this uptrend. This goes all the way back to the beginning of 2025, winter of 2024. So this is where we're at now. And as I told you, we break through there, there's going to be a lot of short squeeze coming. So what we're seeing right now, and this is important to understand, has very little to do with the fundamental situation. This is short squeeze and trend following buying by the algos. This is what's happening. Yes, we have all the JCC going on stuff, right? The loss of trust in the US government and the Fed, that they have the market under control, on the bond market, that is. All these things are happening. The breakdown in the dollar, which we have covered here, we were on it way before it happened. All this is happening. But the severity of the moves that you see in gold, that's what it is. Short covering and trend following. So, look, would I buy gold here, even though we got such a strong macro signal, which also will very likely be very strong on the weekly? And by the way, tomorrow's show about the weekly candles, super important show. If you're into the commodities, you should not miss this show. I don't. I can see gold going higher, a little bit at least. But look at the RSI. I mean, a breather is necessary. The last time we were this high was in January. Now, it went a lot higher, and this is a really important point for us to keep in mind, and that we're seeing right now. Because of the algos, because of the trend following buying, a complicated word, a lot of ings in there, things are moving more viciously and faster in either direction. So, the next resistance zone for me would be the upper end of this yellow resistance zone. I'm going to take out, to make this a little cleaner, this zone now. Don't need that one anymore. Ran right through this. as you can see, this goes back all the way to 2026, and it was support here, and then it became resistance here. So the upper end, which would be around 4,650-ish, 60-ish, that is the zone that I'm looking at. I put in this purple zone just for you. This is what I know a lot of colleagues are looking at, which is around 4,750-ish to 4,780-ish. I see it, right? Because it was the top here. But I think it's not as strong as this support zone. But those are the two zones that we need to watch now. Now, RSI massively overbought, and if we look at silver, we see the very similar thing. Silver actually doesn't look as strong as gold. It's funny, it was the first one to turn. It broke the downtrend first, but it's still below the 200. It's still below this resistance zone right here, which is around 70 to 71. So for silver to get to join the party, we really have to get above 73 on the close. But as you can see, RSI here, we got it here, the same region, massive correction, obviously here, and here, tiny correction. So these were the last times we were that high. These markets, as much as I love them, are massively overheated after the run-up. They are due for a consolidation period. The mining stocks even more so. Now, the mining stocks are small. That's why they ripped, right? Pretty much any mining stock you can look at is up 20% to up to 50% from 3 weeks ago, 4 weeks ago. That's a crazy amount in such a short period of time. However, and this is important for you to keep in mind, remember, saying that the mining stocks or gold and silver need a correction does not mean that we have to go down significantly. We have two types of corrections. We have correction over price and we have correction over time. So if we take a look at silver, just to point this out real quick, and we go to the uptrend, we got two very good examples for each. This brutal time at the end of January, obviously correction through the price, right? Price broke down, depreciated. Now, if we look here, we had this big run up, basically starting actually here in April. Let's do this. Let's go all the way back to April, Liberation, Trump, tariff chaos. We had this big run up where silver ran up from around 28, 29, basically threw in a double, right, till the fall. And then, as you can see here, we had a correction over time. Where, as you can see, look at the RSI, right? We were massively overbought, and then we cooled off in the RSI, but over time, we did not have a massive price correction. This is what I see for gold and silver in the cards now. So, especially for the mining stocks, that's really important for us to keep in the back of our heads for our strategy. There are going to be a lot of investors left on the sideline in a correction over time, because what happens is the prices drift a little lower, so mining stocks 5%, 10%, which is not that much considering a lot of them went up 30, 40, 50%, and they might fall back down to the 200-day or to an uptrend or to a support zone. And the investors will be sitting there and they'll say, oh, it's going to break down. And then we're going to get another 10% down. And then I'm going to buy. But then that breakdown never happens because it's not a correction over the price. It's a correction over time. So you need to watch the candles very carefully and the technical analysis of the mining stocks that you want. And if you see that there's just not a breakdown happening and that there's not a breakdown happening in the leading metals, gold and silver, for example, then you need to hold your nose and buy. Because, ladies and gentlemen, what we see in gold, trend following investing and short covering or not, is a clear end of the bear market in gold. Silver, we still have to jump above the 200, but we already broke the downtrend. It's the same thing. We know gold is going first because of the correlation to the dollar. So let's take a quick look at the dollar and we see, oh yeah, that looks terrible. Look at this. We got a little bit, let me make this a little bigger for you, sorry. Here we go. We got a little bit of fight yesterday, but the dollar bulls weren't even fighting with two fists. It was just basically like poking, right? Trying to poke the bears in the eye, and it's not going well. We're already going down again. So the dollar's going weaker, which I had predicted here early enough for everybody to figure it out. If you took a trade, good for you. I don't trade FX, but we got some downside left in the dollar. And now everybody's seeing this downside, right? That's the thing. So that could support gold short term. Then at some point we gotta have, it's just healthy. We gotta have a consolidation or correction. Again, I'm more in the camp of this is going to be then a consolidation over time, because with what's happening in the bond market, because what's happening in the dollar, I don't see much selling pressure. And again, that's important for the mining stocks. Yeah, if we get volatility in the stock market in the early fall, that could drag down the more speculative parts of the commodity market. So uranium, rare earth, lithium, and the junior explorers. But overall, for the quality names, which is more what I'm interested in, meaning advanced explorers selectively, definitely developers, definitely the junior producers, those are my favorites, and then the big senior producers, I don't see much selling pressure at the moment. We will need to wait and see how crazy the volatility could get. Okay, so now let's get to the two metals that look way better and way more interesting than the overheated gold and silver. And we're gonna start with copper. Now, I pointed out copper to you as a breakout candidate, and let's be fair here, I was early. We had a breakout here, couldn't hold it, went back down, tested the 50-day successfully 3 days in a row. That's as nice and bullish as it gets. We are still clearly above the 200 golden line, above the 50, just successfully tested. Perfect. And as you can see, today is the first big up move. So there is action happening in copper now. And if I draw in the downtrend for you, oh, do it like this because we got more points that we're going to hit. So, and that explains the big move today. We just broke the downtrend. What happened the last time we broke the downtrend? We see it right here. Yeah, we had one retest, but then we had a nice up move into the resistance zone. Look, if we break this resistance zone in copper, go to all-time highs, all things are off. It's going to be a massive rally. Copper is a big market. This is where the institutional investors invest in when they invest in critical metals. The trend following systems, the algos, they just gonna hit the buy button non-stop. And pay close attention to the copper stocks. Some of the bigger ones are starting to move, which tells us the institutions, some of the smart money is trying to position itself in copper, and it makes absolute sense. We just made a higher low, as you see here in the chart. And what I really like about this setup in copper is, look down at the RSI. Look, that looks completely different than gold and silver. We got a lot of room to run here. So the investors that are jumping on the gold uptrend right now, that are not in it because they're gold fans, there's going to be a time, and I don't think it's very far off, where they're just going to look at gold and they're going to look at copper and they're going to jump ship to the copper trade. That is the hierarchy that always happens. Gold goes first, then follows copper. Now, let's look at the other trade that nobody's talking about, because copper, at least some people have on their bingo card. Nobody is talking about palladium. But look what's going on in palladium. This is really interesting. So we haven't spoken about palladium in a long time. 2026, nasty sell-off. Wave 1, right? Rebound. So if you wanted ABC, A, B wave, the up wave, doinked off the 50-day, C wave down. That was brutal. But interestingly enough, palladium bottomed in June and then improved significantly while gold and silver were still struggling, which shows us palladium kind of does its own thing. If you look at it, palladium started doing higher highs way earlier than we saw in the precious metals, the big ones. And as you can see, we jumped above the 50-day, retested it successfully. We have broken the second downtrend very recently. And we are ready for about a 10% party all the way up to the 200-day moving average. Now, is this a great long-term trade? That depends. That remains to be seen, because again, we're still below the 200-day moving average, way different than what we've seen in copper or in gold. So if you want to take the less risky trade, that'd be copper. But if you want to take the early swing trade and then see what happens with a wild upside possibility, then palladium could be interesting. I mean, you see the moves in palladium, the up moves in palladium are just vicious, right? Once it starts moving, it just goes up like a rocket ship, and not a SpaceX rocket ship. So this is what makes this trade interesting. And I'm not saying this is a recommendation. I'm not your financial advisor. You know how this goes. I'm a guy who likes to stay ahead of the market. And if you like this video and you like to be ahead of the market, hit the subscribe button. Everybody's talking about gold and silver. Some people are talking about copper, not enough in my opinion, but at least some. Nobody's talking about palladium. This is our chance. Here is an interesting risk-reward setup where if I want to take this trade, I can get in now, I can ride it up to the 200 and see what happens. And if nothing happens, I'll just put this stop either close up there to get out with a small gain, or I put it where I got it in my entry price and wait. And if we break down in palladium, okay, then I get out plus minus zero and nothing happened. All right. But if we break to the upside, well, you have seen the Ibiza level party that Palladium throws. Look at this, even in the bear market, just vicious rallies to the upside once it gets moving. That is a risk reward that not a lot of commodities offer right now in this setup. And why I'm saying not a lot, I mean, this is a party of one. So I also promised you the super hot setup. So we're going to get in that. I'm going to keep my word. And here it is. And that would be the big brother of palladium. That would be platinum. Now this one is big because we are right at the resistance. We're basically where gold was 2 days ago. Downtrend, 50-day upper end of that resistance, the yellow resistance zone that goes all the way back to December. You see it here. We break it, platinum is off to the races and it's partying. This is a small market. We know what happens when it runs. It runs like a gazelle on cocaine. However, contrary to palladium, as you can see here in the RSI, we are already entering overbought territory. So this is a more risky trade at the moment. Now, if you wait for a pullback, that could make it more attractive. But this is a really hit and miss type of setup with a high RSI that might, for my taste, this is too risky. But I want to point this out, that we are right at this breakthrough point. And I know there's some people that do like to trade this full risk, short-term options, YOLOing this thing. Okay, I'm not going to fight you. You certainly have a lot of adrenaline in your life. I prefer other setups. But this is the most dynamic setup. Not in risk reward, that would be palladium. Not in terms of fundamentals, that'd be copper. But in terms of, we get this breakout, we're going to see a major surge. And it's going to be so fast. I mean, if you have a stop buy order in, that would work too. That could be interesting. But if you want to trade this when it happens, well, you better drink a lot of coffee because you're probably not going to sleep for the next days looking at the screen every minute to not miss the breakout. But clearly, we see now the gold and silver party is starting to spread over to more commodities, which means there are more options to make money in the commodity super cycle. Don't be upset if you missed the gold and silver rally. There's more money to be made in this super cycle. That is it for today. Unreal, it's Friday already. Incredible. Have a great start to the weekend. Tomorrow, weekly charts, really important. Gold, silver, dollar, oil. Oil. Pay attention to oil. Fighting with the downtrend too. Have a great day. See you tomorrow. Bye-bye.